Well, we've got to start with the biggest story of the day here, the August jobs report. The U.S. added fewer jobs than expected in August in the latest sign of a cooling labor market. With more on what Wall Street is making of the print, let's go ahead and bring on in Yahoo Finance markets reporter, who is the man himself, the myth and the legend, Josh Schafer, with us here on set. All right, Josh, so what do we make of this print here?
Brett, I'm just shocked by the intro.
I mean,
flattered.
I try.
Absolutely flattered.
Everybody gets a promotion when I introduction them.
So, I want to run through a little bit of what Wall Street's saying this morning, right? I was looking through some economist notes, and I'll highlight two off the top here that I think sort of sum up the tenor that we're hearing from economists this morning. So Paul Ashworth, the chief North America economist over at Capital Economics, he said overall this August jobs report is still consistent with an economy experiencing a soft landing rather than plummeting into recession. And then you flip over to what Morgan Stanley said. This is Seth Carpenter, their chief global economist. He says today's report implies recession fears may have been overdone, but confirmed slowing. We retain our baseline view of 25 basis point cut from the Fed in September, but await Fed speak in the next CPI. It seems like overall economists, not seeing a lot of economists on the street right now saying this report points to 50 bips in September, but it does open that door for a 50 basis point cut at some point, as Maddie was just referencing, whether that's November or December, and you get to a total of 100 basis points of cuts at some point this year. But I thought what Seth said there was interesting. The report, since it wasn't decisive either way, right? It wasn't, oh wow, the economy is, or the labor market's significantly stronger than we really thought, or significantly weaker. It sort of leaves the debate open for what we might hear for the rest of today, potentially from the Fed, but also that CPI print next week. If you get a really strong CPI print, inflation falling more than we expect, and that picture continues to look very well, maybe there is enough in this labor report for the Fed to want to go 50, and maybe we're still sort of talking about this debate all the way leading into the report rather than it felt like today coming into it, maybe we just have an answer, right? We were going to get a firm answer, and it seems like we just simply did not get a firm answer.
That's exactly what I'm taking away from your reporting in terms of the market reaction from the likes of Seth Carpenter. It sounds like, yeah, we don't really know what the Fed is going to do with this.
Well, and I think the stock market's telling us that too, right? Mm-hmm. You guys were just talking about what the major averages are doing today. Okay, so we got a rotation out of tech, the Dow's up, and the S&P's down a little bit less than the NASDAQ. Mm-hmm. Isn't that what we've seen all week?
Right.
Right? We're still seeing very similar trading action to what you're seeing before this report, which says whatever traders and investors were feeling 3 days ago, I don't really know if they feel that different now. Mm-hmm. And maybe we just need to learn a little bit more about where things stand. I think there's other parts of economic data people have been watching too, right? You're going to get another retail sales print. How's the consumer doing? That came in better than expected last month. So there's other pieces of the story here that I think we're going to need to get more of a clear picture, which keeps our jobs fun.
Mm-hmm. Very true. And we know that Powell loves the anecdotal earnings data and things like that as a former Wall Street guy. So maybe these upcoming earnings prints are going to be important for him, but not necessarily the rest of the voting members. Josh, thanks so much for joining us. We really appreciate it.